Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Remember, anything said in this piece is for media publication only. It's not investment advice, not financial advice. Let's kick off. So the big news, the massive news was last night when Jerome Powell got up and gave the Powell speech on the state of the economy, the state of interest rates, state of inflation, state of industry, etc. And he indicated very strongly, significantly, that the markets bought onto and they logged on to what he stated. He said that the Fed will be less aggressive when it comes to raising interest rates, even though there is a fight of inflation continuing. And therefore, those words, less aggressive on interest rates, sent the equity markets flying and the dollar sinking. So let's dig a bit deeper into what's going on here. So the Fed, which is the US central bank, has got a major problem at the moment because what they've done is they've raised interest rates this year significantly to much higher than initial analysts thought, and much higher than traders thought, to much higher level than any economist thought that would happen by end of 2022. So the interest rates in December are likely to go up by 50 basis points. However, the Fed now is clearly indicated in Jerome Powell's speech that they're going to be lighter or going to be more considerate in raising interest rates going forward. That immediately sent equity markets higher, bond prices lower, and the dollar lower. Now let's look at exactly what's likely to happen. So the Dow went up over 700 points, the Nasdaq went up over 400 points. European markets were up because the markets now believe that in 2023 rates are not going to go up so much. That's going to help mortgage holders, help those businesses that are dependent on loans and finance. It's going to help the Nasdaq, which is heavily dependent on finance, loans, and bond rates. And that gave a boost to equity markets. However, inflation is still there and interest rates are still there, but the markets, equity markets, read ahead by 6 months, 8 months, a year. They expect that interest rates will level off and even potentially come down. I personally don't believe they're going to come down. I think they're going to continue rising, and I believe that the economy is in for a few more shocks that's going to make the speech that Jerome Powell said last night look redundant and look irrelevant come January, February, because inflation is likely to creep up again. What is likely to push up inflation going forward? So the war in Ukraine, Russia is not going to get any lighter. If anything, it's going to get more intense. And that's going to put a big drain on soft commodities and potentially oil. Putin is not going to withdraw from Ukraine. He's not going to withdraw and have a situation whereby his reputation and credibility is going to be slighted. So that's one geopolitical risk. The other geopolitical issue is what's going on in China at the moment with whether they are going to lock down or not going to lock down. Okay, that's also going to have a big impact as to where overall the supply chain is going to go, and is that supply chain going to be smooth or is it going to be erratic? The other factor is there is a contraction in consumer confidence and consumer spending. The cost of living is going up. Now, the cost of living we're talking about mainly is in food and energy prices. Okay, so and that's going to continue. The energy price is going to continue, especially as a result of what's going on in Ukraine with Russia, and the food prices is going to continue rising. Food and energy are big factors in the consumer confidence field, the consumer confidence arena, and that will dent and impact overall on financial markets. I would not be personally, I am not a buyer of the markets at this level. I think they're far too high, and any slight change in attitudes or economics or any types of numbers coming out is going to shunt those markets downwards. So in my opinion, the equity markets is an opportunity to sell into, because I don't believe that the bear market is over. Maybe it is. Now maybe the bulls will tell me, wow, there's a great time and we're going to start shooting up now. Probably by the end of the year, put my neck on the line, probably by the end of the year, you could end up with US equity markets reaching all-time highs. Remember, I've been saying for a few weeks, Don't be surprised if equity markets by year end are pushed much higher for a couple of reasons. One, traders at the beginning of the year were caught with their pants down or caught short when the market shunted downwards and they were longer position. So what they're trying to do is they're trying to capture on some of the losses that they made in 2022 by pushing the markets up. Now, come to December, you could have a rally all the way to the end of 2022. However, in 2023, I'm still of the opinion that we're going to end up with a significant drop in equity prices. Going on to the dollar sank yesterday against the pound, against the yen, against the euro. The euro, it's at 104.5. The pound went to 121. Again, as far as the pound's concerned, I'm a big buy of the pound. I think the pound against the dollar should be anywhere between 125 and 127 short term. I think it's still well oversold. It's not got anywhere near a comfortable level at this stage. Longer term, I'd call it at 140, 145, but short term at 120, 122, 120, 125, 127. As far as the yen is concerned, the yen went all the way down to 136. That's the lowest it's been in many, many weeks. As I said again yesterday, I've said over in the past few weeks, overall dollar trend has changed. Remember, it got frustrated and got topped out and got stuck at a certain level. I said it's going to come down from there, and the dollar's come all the way down and probably will continue going down through to the end of the year, even after the next interest rate rise in the States, because it's already priced in. So you could be looking to go longer pound. Euro is an interesting one because the euro is, well, Europe's in a difficult position at the moment, so I wouldn't really be specifically long of euro. It's mainly gone up because of dollar weakness, and also dollar yen. I wouldn't particularly be a seller of that because I still think it's on an uptrend. But overall, short term, the dollar's going to get stronger. Oil's crept a little bit back up now. It's stabilized. It went all the way down to around about the 72 level. It's now at 80 level. Bitcoin had a good day yesterday. Went all the way back up to 17,000. I don't believe that's a buy. I still think at these levels, it's probably an opportunity to sell into Bitcoin. As far as Tesla shot up yesterday, Apple shot up, Amazon shot up, Meta shot up, all of the NASDAQ shares and all the high-tech shares all shot up on the back of potential lower interest rates, which is good for the high-risk sector. I am not a buyer of these markets at these levels. I do believe that the markets are going to come down significantly. But you can't fight the trend. The trend is going to be up until the end of the year at least. Let's see where we go. I'm only one person amongst billions. What's my opinion worth? But that's my opinion. That's where I think we're going to go. I think we're going to go down. Opportunity to sell into this rally. Okay? Mayor Valensky, driving markets. Subscribe, comment, pass it on to your friends, pass it on to your enemies, whoever you want to pass it on to. Just share it, and you can follow me on Instagram also. Have a good day.